So you may have already heard that every 4 years there is a Bitcoin halving. But what is it? How does it work? And how does halving affect Bitcoin? So in this short but very informative video, we will explain in simple terms what BTC halving is, or in general, and what it means to the whole crypto world. Okay, before we jump into Bitcoin halving, let's first understand the concept of cryptocurrency halving in general. Halving is a process that involves reducing the reward for creating new blocks in a cryptocurrency blockchain. This mechanism plays a crucial role in controlling inflation and regulating the supply of cryptocurrency. And yeah, many cryptocurrencies such as Litecoin, Bitcoin Cash, and Dogecoin have also implemented similar halving mechanisms. However, it's Bitcoin halving that steals the show. Why? Well, because Bitcoin is the trailblazer, the pioneer that sets the stage for the entire cryptocurrency industry. When Satoshi Nakamoto, the mysterious creator or creators of Bitcoin, in a way, was designing the system, they faced a critical question. How should new Bitcoins be issued and distributed? Centralized options were out of the question, given the underlying philosophy of Bitcoin. That's when mining came into the picture. So miners, the backbone of the Bitcoin network. They collect transactions into blocks and add them to the blockchain, ensuring reliability and security. To incentivize miners for their essential work, they receive rewards in the form of newly mined Bitcoins. So each time a block is added to the blockchain, miners are entitled to a certain number of Bitcoins. So basically, this process keeps the system functioning and introduces new coins into circulation. Okay, got it, but why do we need Bitcoin halving at all? So listen carefully. Bitcoin halving is a mechanism to control inflation within the Bitcoin ecosystem. It A. ensures that the supply of Bitcoins is gradually released, and B. prevents sudden increases in the overall circulating supply. As you can guess, Bitcoin halving reduces the miners' reward for each block by half. So imagine if miners were previously rewarded 50 BTC per block, after halving, they would only receive 25 BTC. So interesting, right? But you might be wondering, why on earth complicate monetary policy? And is it fair to the miners to receive lesser rewards after halving? Well, answer lies in controlling inflation. The scarcity and increasing difficulty of mining each subsequent unit aim to preserve the value and store of wealth characteristics that Bitcoin was designed to achieve. So if Bitcoins were created in unlimited quantities, their value would just decrease over time. Well, after all, rarity is a fundamental characteristic of hard money, just like gold. Besides, Bitcoin's monetary policy itself is quite different from the traditional fiat currency system controlled by central banks. The issuance of fiat currency is often unpredictable, leading to a decrease in its purchasing power. But Bitcoin's essence, on the other hand, was to mimic the scarcity of a rare commodity, like gold. Thus, Bitcoin halving is programmed into the cryptocurrency's code, and it is a predetermined event that happens automatically. It is not influenced by any central authority or external factors. Of course, Bitcoin halving has an impact on the profitability and economics of Bitcoin mining. And yeah, miners need to adjust their operations and strategies to compensate for the reduced block rewards. But that's how the network operates from the very beginning. So the next question is, how often does BTC halving happen? Satoshi Nakamoto implemented a rule that every 210,000 blocks, or around every 4 years, the mining reward will be halved, which carries significant implications for the whole Bitcoin ecosystem. The first Bitcoin halving occurred on November 28, 2012. The miner who successfully mined the last block, number 209,999, was rewarded with 50 Bitcoins. However, in the very next block, number 210,000, the reward dropped to just 25 Bitcoins. And yep, that was real. Imagine such rewards now. Anyways, this marked a historic moment for Bitcoin and set the stage for future halvings. Okay, the second halving took place on July 9, 2016, reducing the reward to 12.5 BTC per block. Finally, the most recent halving occurred on May 11, 2020, further reducing the reward to just 6.25 BTC per block. And this is where we are right now. So the next Bitcoin halving is expected to happen in 2024, reducing the reward from 6.25 BTC to 3.125 BTC. And as we approach year 2140, estimates suggest that the last Satoshi, which is the smallest unit of Bitcoin by the way, so the last Satoshi will be mined, marking the end of new coin production. But wait a second, is this gonna be the end of BTC? Well, no. In addition to receiving rewards for creating new blocks, miners also receive transaction fees, which depend not on the amount, but rather on the weight of the transaction. According to Satoshi's plan, it's these fees that will allow miners to continue to support the network when all Bitcoins are mined. Well, not quite sure if we'll ever witness that day ourselves. Now, let's shift our focus on an intriguing question, like how does halving affect the price of Bitcoin and what we can expect from the market next. If we take a look at the charts and the historical growth dynamics of Bitcoin, we can see that Bitcoin halving events have been associated with bull markets and significant price increases. And yeah, many crypto enthusiasts and investors anticipate that event with excitement. Plus, more people become interested in cryptocurrencies, new money enters the market, and so on. However, this is typically followed by a downward trend as Bitcoin experiences a correction phase. So the price reaches its lowest points and history repeats itself. Although historical patterns can provide insights into possible scenarios, it's important to note that past performances does not guarantee future results. Yeah, it's just because Bitcoin's landscape has evolved significantly since the last halving. So the influence of media, the ICO mania, and the entrance of institutional investors. So all these factors have reshaped the perception and dynamics of Bitcoin. That's why when we speculate about the future of Bitcoin and its price, we need to acknowledge the surroundings, the events that shape the cryptocurrency ecosystem. And yeah, as you know, the world of cryptocurrencies is constantly evolving, and it is essential to stay informed and adapt to the changes. So yeah, Bitcoin was specifically designed to be valuable, with only 21 million Bitcoins set to exist. Each halving event further strengthens Bitcoin's hardness and monetary commodity. And yeah, by controlling its production through halving, Bitcoin's inflationary nature is tamed, enhancing its value proposition. And by the way, if you want to know how much time is, well, exactly before BTC halving, you can always visit the Binance Academy website or Gate.io BTC halving countdown. Well, anyways, you can see that by yourself. By the time of recording this, well, according to Binance Academy, there are still 278 days in around 42,000 blocks ahead before, well, the next BTC halving in 2024. So as you know right now what it is, you know exactly what to do when the day finally comes.